Let's go live, baby.
Yeah, we are live. We are live. We are live. We are live. We are live.
Good, good, good.
And so those that are subscribed to Dr. Bill's official YouTube channel will get a memo that we are live. Alright. All right.
Can
So if you're sorry, what did you say?
we share our screen?
No, not yet. I just want to do a quick intro. There's
All
something
right.
I'm supposed to pin. Just 1 minute, please.
I'm not going to ask.
All right. So I want the numbers to come up. Then we can kickstart. The views is not coming up yet. I'm just saying okay, I'm seeing 11 views. Alright, so welcome everyone, welcome. I heartily welcome each and every one of you to this new episode of this new episode of the Dr. Bill's Monday Outlook section. Yeah, so it's a new week and the second week of March if I'm not mistaken. So you guys know how we do it in Dr. Bill's Academy. We come here. We show you guys what we have for the week ahead from professional experienced tutors. They give you an outlook and an outlay of what they expect to happen on your favorite pairs this week, right? So as you know, this what do you call it? This section is hosted by Dr. Bill's Academy, the elite team of the Dr. Bill's Academy, and proudly sponsored by Hantech Markets and Hantech Traders. I know a good number of us is still struggling with scaling up our capital size as regards trading, right? So, and that is why Hantech Market is here for you. All you just need is log in through the Dr. Bill's official link, Dr. Bill's Hantech official link. There's a lot of packages, products, and in fact, there's some nice incentives that you can take advantage of. I'll be posting some on the screen as the class goes by, so we can take advantage of these and get accounts for ourselves and scale up our trading journey. Or as far as you're abiding by the rules of each product that you're getting for yourself, you are safe. You're totally safe. You will make money. You withdraw the money, and you will be able to have that forex lifestyle. All right, guys. So without wasting much of a time, I'll be bringing in on the tutors. We'll be taking it one at a time. They'll be showing us what they have for us for this week and what they believe with their trading system should happen this week. All right, Hebe, can you hear me? Tutor Hebe.
So I can hear you, boss. I can hear you.
All right, so you can share your screen and let's move
All right.
forward.
Good morning, guys. Good morning, guys. So welcome to today's live session. Can you guys see my screen? I started sharing my screen. Can you see my screen, guys?
Not yet. It's loading up. We can't see your screen yet.
Okay, let me prepare you. So, guys, and lucky you do not link them on the giveaway Antec is doing. Antec is doing a giveaway. Like they should just go to their what's it called, their page. Can you hear me?
Yeah, we can.
Yeah, okay. So can you see my screen now?
Yes. We have the chart of euro versus the dollar.
Exactly, exactly. So welcome to today's session, guys. I am Majani Abaomi. You can call me AB. I'm a tutor under Dr. Forex Academy, and I've been a trader for 5 years now. And people that are used to joining this session, You know that I trade USD mainly. So I'll be showing you guys what I have on USD. But before that, I just want to drop a hint. Like this thing is sponsored by Antec Market. So and Antec is doing a giveaway. All you just need to do is go to their account, Instagram account, follow, like, and comment. They will pick randomly. So they'll be giving a prop account. So that's just it. So now to what I have for today, which is let's analyze Euro USD. So this is the weekly time frame. I start my analysis from the weekly time frame. Price has been bullish on the weekly time frame. So and this is a resistance that's gotten to. So a support rather this is support that's going to. So I expect more buy up the upside. That has actually triggered at the support. So I expect it to go to the upside. So everything I'm looking out for on USD at the moment is a bullish move. So now let's go to the 4 hours. So this thing has actually started, but the confirmation has not been solid because it's not building structure to the upside. Let's see, price was selling down. It traced and it sold down again to create this low. So for us to confirm that the buyer has actually officially started, though it has triggered from the support, but it has not like the confirmation is not solid. So for it to be solid, I'll wait for it to break this place first. Once it break this structure, then I will know that yes, so price is actually selling to the upside. Then I'll wait for a retracement for a possible continuation. Yeah. So and I always say in trading there must always be a retracement because for every in whatever is that okay. Let me just explain it. Okay, if price is selling now, there are people that are buying. Yeah. So for every buy, there must always be a for every buy there must always be a sell retracement, and for every sell there must always be a buy retracement because whoever is selling, there are people that are buying, and whoever is buying, there are people that are selling. Yeah, that's just it about the market. So price slow down, so there should be a buy retracement or a buy move. So for us to confirm that yes, there are more buyers in this place, then price would have to break this, which is a change of character. So people call it change of character. So that shows that price has changed character to the upside. So but for this week, all I'll be expecting is let's go to 2 hours. All I will be expecting is price to break this place, then retrace, then do a continuation to the upside. That's just what I'll be expecting. But at this moment, price has not really done anything much. And this place, all these places are liquidity zone. So the possibility of price to come and take it out is certain. The probability is high. Let me put it like that, not certain. Nothing is certain in the market. So the probability that price don't want to take this liquidity zone, can you see? This is a liquidity zone. So the probability that price don't want to take this place out is very high. Okay, so all I'll just do is to just calm down and wait for it to be broken. Then once it's broken, I'll wait for my retracement. Then I'll look for my entry. Okay, so let's go to 30 minutes. Let's see if we can like get the possible entry. So this thing is not showing anything much at the moment. Yeah. It's even ranging at this place. So all I'll just have to do is wait for it to break to the upside, then like that. Till we break this place. So we can scalp some of this buy here. Till we break this place, then look for a major retracement for a buy continuation. So if you have any question on everything I just explained, can you just drop in that box and ask your question? So at the moment, everything you're waiting for is wait for it to break this place for a major move. But you can scalp buys till it breaks this place. So that's just what I have for Euro USD. And note, the scalp, that's if you are good with it. If you are not good with it, don't try to enter scalp and think you are Van Dan or you are Melin. Yeah, that's if you are good with it. So, but the best advice is just wait for this place to be taken out. The once this is taken out, there will be a retracement for a possible continuation, buy continuation. So for me this week, I'm bullish on Euro USD. So if you have any question, just drop it in the chat box. Oh, we don't have chat box here, I've forgotten. So if you have any question, Lucky, are you there? Lucky,
Sorry, I was talking.
can you guys hear me?
The chat box is
Okay.
there. You just have to open it, click on chat, and you see their questions. Someone's asking, are you buying euros, euro USD? Is it advisable to scalp? Just click on the chat section and you see their questions there.
I think I will have to stop sharing my screen before I can go to the chat section.
Oh, okay,
So should I
really?
stop sharing
Okay.
my screen? So I can-
Let me ask someone. Let me tell you some of the questions they are asking. Someone is
Okay,
asking,
yeah.
is it advisable to scalp? Someone is asking, are you buying euro
Yeah,
USD?
like I said, I'm bullish on Euro USD this week. Yeah, so I expect it, but for me to be for proper confirmation, I need it to break this high. Then once this high has been broken, then I can confirm that yes, so the bullish move has fully started. But at this place, I can there will be buy scalps which you can enter. Yeah, but like I said earlier that you must have to be very good with the buy scalp with scalping before you can do this scalp. So if you are not good with it, don't do it, or else you'll be putting your account at risk. So just wait for place to this side to be taken out, then before you can enter a very certain buy or something like that. Yeah. So I believe I've been able to answer that question.
All right.
So
So,
any other question, Lucky, before
okay, so someone is asking, what is wrong with taking the trade from the support zone?
yeah, because my like I do have support zone already, and it has triggered from there. But it might like the taking it for the support zone, it is a weekly this thing. Right? See, it is a the trade is from the analysis is from the weekly time frame. So it is what's it called? It is not a day trade. It is a swing distance. So me, I don't trade swing. So I wouldn't take it from that support zone. I'm not a swing trader, so I wouldn't take it. If you're a swing trader, you can take it from the support zone. But note your stop loss will be very huge. Yeah. So I don't want to risk that. That's just it. So I won't be taking it from support zone. So I'll wait for it to give me like a day listing before I take it. So I believe I've been able to answer that.
All right, yeah. So I think they are satisfied. Somebody's asking, maybe another trader will take this, so we don't have too many people taking gold. Because somebody's asking about what's
Okay,
your view
yeah.
on gold, so someone else can take
Other
it.
traders will come out. Yeah.
All right.
So that would be
So
all from that would be, if you love to reach out to me, you can reach out to me on IG, ab.inc. So you can bring the next door now, Lucky.
all right, guys. So wonderful one from Mr. Heavy. He gave a breakdown on Euro USD and what he's expecting this week. So he's bullish on Euro USD. If that tallies with your thought process on the distance, then you know that you're on the right track and you can possibly look for possible entries. All right, OED, please confirm if you can hear me. To the OED.
My chief, my
All
chief,
right,
I can hear you. I can hear you.
all right. So you're on. Let's move forward.
All right, all right, all right, all right. Yeah. So, good morning, guys. I trust that we are doing very great. My name is Oed, and I'm here to take us on today's market outlook. Right? Can you guys hear me? Lucky,
Yeah,
can you
loud
hear me?
and clear.
All right, all right, all right, all right. So, basically, yeah. We are in because before I start talking about technicals or whatever, right? I always try to let us know where we are in time. And before that, I would like to uh, a little bit of awareness about Antec markets, right? Or Antec trader, which is also a prop firm, right? They are currently running a giveaway, right? Just have to run to their IG and comment, repost, put it on your or your highlights and all of that, right? So you can be very much lucky to win an account, right? So basically that's that about that. And if you are willing to scale up, right? Their prop firm is literally the best way to go. You know, you can start as low as $5,000 account, $10,000 account, 25, 50, 100, just scale up. The more you get psychologically familiar with figures, you can scale up just like that from 5K to 10K to 50K to 100K and all of that, right? Because scaling up has a lot to do with getting familiar with figures psychologically, right? So that's about that. So moving on, I would like to share my screen now and give us one or two things I'm expecting from for the week, right? Coming. So yeah, can you guys hear me?
Yeah, and we can see your screen also.
Can you see my screen? All right, all right, all right. Can you see my chat?
US 10-year treasury, I think.
Yeah, 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 yeah. All right. Okay. So today I'll be giving us an outlook, our outlook about my outlook basically about Nasdaq and gold. For now, I'm focusing on gold and Nasdaq. Actually, I have a lot that I track, but basically I'm following where the money is moving towards, right? So basically you can see that we have a lot of secondary instrument that I track here as well. And also we have, some major currencies as well that I also tracked. But for now, I'm just following Nasdaq and what and gold, right? And US 10 Treasury, which is US 10 um, government bonds 10 year, right? Basically, I'm using this one to track gold, right? It has a diametrically relationship with gold. You understand? So, and on the larger time frame wise, you can see that from here, this is around 1912 or something like that. That's where the whole price structure actually started from. And then, we just sold below that in the 20s, right? So, which means, and if you understand structure very well, this is where the bullish structure starts from to the upside. And we've been selling up since then. We've been selling, 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 and then we just override that bullish structure right now, and then we are flipping bullish again. So what are we trying to do? Let's say, for example, we just broke the structure, and if we are going to have a retracement, probably continuation for this sell, we are going to have continuation for that sell, right? Definitely, we have to try to see a what, a premium price, right? Which is why I'm delineating a Fibonacci 2 from this high to this low. So what I'm expecting, I want price to get to this 50% level, right? And as you can see as well, we broke lower like this, and then higher we broke lower again, higher we broke lower again, higher, just basic structure, right? A high, a low, a lower high, lower low, 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 until we actually broke this low, right? And this is the recent high we just broke right here, which is the most viable structure. Just like I said the other time, this particular instrument is diametrically opposed to gold. If gold is buying, this one will be selling, but you have to check this one first. Whatever this one is doing, right, is going to determine what gold is going to do next, right? And you have to always, correlate it to what dollar is also doing. But if you are checking this one, you can always check for gold as well. Now we just broke structure here, right? We just broke a structure for these bullish legs, right? So which means that we can also be anticipating like a very nice retracement lower. to have a discount price so that we can do what? We can continue buying. And if you've been in the space for a very while now, breaker is not like something that is that will sound alien, that will sound new to a lot of us. A breaker block, right? You can see one, two, three, four. All those four candles, all of them are breaker blocks, right? Just delineate them out, something like that. So price can literally just, in a sense, drop into them, and then before we start buying to the upside. Now, this is quarterly time frame. I like to go as high as bigger time frames is available, so that I can have not like perfect view, but a less noise view. That's what I will use. A less noise view, not perfect view, but a less noise view. That's a perfect illustration that I will use. So I'm currently from a quarterly perspective, price will just drop to this level, which is also like and if you look at this breaker, right? Look at this breaker that we have here at the very probably below the 50% of that breaker. If you measure that, right, from this high to this low, you can see the 50% of that breaker. We have 50% of the whole range from this low to this high, which is a perfect discount price in that sense, right? So we it will be very it will be very more probable to see price come down to this low and continue buying to the upside until we have that 50% range from this high to this low achieved. Do you understand? That's the point. So um now I've given us the higher time frame view. Now let's come back to the now moment view. What are we seeing? What are we expecting right now? What can we actually make use of right now? Right? So currently, from this range high, let me take this out. Now we have a range high here to this range low, and we've had a lot of price action inside of that. This is the current price. What is the range high and range low that we have in that current price, which is this and this, right? We have buy side and we have sell side liquidity. Currently, we just took out this low and price is expanding, right? So we just flipped this fair value gap, right? And we still have this relative sell side liquidity. It is more very much visible on now on a daily time frame, right? Look at this eye and this eye. That's relative sales buy side, right? We just took out sell side here. Now this is the opposing what buy side liquidity. So we might see price retrace back to this before we continue buying to the upside. So basically, if we see price continue to the upside, we are going to see more good shots, right? We are going to see more good shots. So basically, that's that about that. And if you go back to weekly, you can see that this is the low that we got out first, and then this is the high that we got out first. So what does that mean? We have from this high to this low, right? Price rallied higher again. We took out this low, right? And then we took out this high. Now we have what? A bullish daily range. But yet we are bullish on a very much higher time frame, which means this low might not actually hold in a sense, right? If you've been in the space for a very long time, what I'm trying to say is not going to sound confusing, because from a quarterly time frame perspective, we are kind of bullish, and from weekly, we are having a bullish. Sorry, from quarterly perspective, we are bearish, and from weekly perspective, it's giving us like a weekly bullish daily range. So if you what I'm saying is not going to sound very confusing to you, because you understand that everything is actually based on probability, right? You have to be fixed on your rules. When I say on your rules, your risk management, how many trades are you permitted to take in a day, in a week, in a month, in a quarter? Me personally, I'm permitted to take 16 trades in a quarter. 16 trades in a quarter, and I know the precise my current win rate fluctuates between 65% to 75% win rate with a minimum of 1 to 2 risk to reward ratio. I'm allowed to have 1 to 3, 1 to 3.5, 1 to 4, 1 to 4.5. But the minimum risk to reward ratio I will personally take as a trade is 1 to 2 risk to reward ratio. Now, those are fixed rules, right? And you have to be flexible on your expectations. And as you can see, we have a lot of expectations here. We are bullish quarterly, right? And we are bearish quarterly. And right now, what we are having from weekly perspective, it's giving us bullish perspective, right? But we all know that higher time frame is king, right? So no matter what the lower time frame is trying to do and all of that, the chaotic behavior and all of that, the higher time frame always wins, right? So in the sense that it might all sounds contradicting, right? You have to sit with that contradiction. You have to be very flexible with all of that contradiction. This time frame contradict this, that contradict that, and all of that, right? That is your work as a trader. You have to manage risk. Uncertainty equals risk, and your business, your major work, your major job as a trader is to be a risk manager. In fact, you can even replace that word as a trader as a risk manager. We are all risk manager, right? We are managing risk. Do you get? Because there's a constant risk. There's constant risk in the market, and you are managing that risk. Do you get? So as I was saying, so basically, I'm expecting this high personally, from my home perspective, from what I know that defines an edge from me, for me as a trader. I'm expecting this eye to be taken out. And if this eye is being taken out, what does that mean for gold? That's bearish move. All right. And the same thing, you can see that dollar is printing bullish as well. If this guy, let's go back to that guy. If this guy is bullish, dollar will be bullish as well, right? And then that's bearish for what? That's bearish for gold. I'm still going to talk about VIX, right? So this is gold. This is gold futures. This is gold futures. And without wasting our time, this is what I have on gold on daily time frame, right? So basically, if we are going to be bearish, right, I'm looking at this fair value gap, right? If that can actually initiate a continuous bearish price for us, right? Um, and again, we might not get to see this retrace back to this, right? We might not get to see that because this guy, 10-year yield and gold, they don't move like a directive, they don't move a direct correlation like how dollar and euro USD moves. If you have been trading dollar and euro USD, you will know that their correlation is almost instant, like almost instant. Do you get? But this 10-year yield and gold, they don't do it that way. Do you understand? They don't do it that way. They have to like probably spend some hours or some days before they adjust and align with each other. Do you understand now? So basically that's that about that. And as you can see, this is where I'm expecting price to trigger this level, right? So if that triggers, I will be in that trade. I've had this since last week, right? So that's the I'm bearish for gold. Basically, I'm bearish for gold, and you can extend your TP to be this area. But the only reason why I didn't extend that to be that area is because we have an uncompleted mitigated structure here. You can see this high, this low right here. Price took this low, right? We expanded higher, we retraced. We have efficient price delivery there, and again we broke this structure here, but we didn't mitigate that structure, and there's a very nice break. So if price is going to sell, you might sell from this level to this down, right? And this breaker can be a very aggressive offset for, and this is okay for me, 1 to 5.7. That is very much. If that's the only trade I take this week, I'm buying by it. I'm allowed to take 2 trades in a day, right, and 4 trades in a week. But that doesn't mean that I must. It doesn't mean that I must take 4 trades in a week. Last week I only took 1 trade and I was done, right? So you have to have these rules in place. If you don't have these rules in place, markets are going to make the rules for you. And by the time markets make the rules for you, you are going to lose. Definitely. That's just the truth. There's no way you are becoming profitable with that. You have to set your rules. You have to set your rules. If you allow market to set your rules for you, you are not going to be profitable. That's just the truth. That's just the truth. And there are some rules that you have to set for yourself that are fixed, and there are some rules that you have to that you have to that have to be in place that are flexible, and that involves your expectation of what price will do or will not do. They have to be very, 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 very flexible because you don't know what's going to happen. Nobody knows. Nobody knows. Even the market maker, they don't know because there are also some market makers that have more money than them to move the market. Adding being you have more money to move the market now, you can always know that something is going to happen. That is what you want to do, and even that even involve risk because the money that you have that you want to use to move the market, someone else has more than that, right? So that's just the reality. That's the boiling it down to the reality of how price moves. That's the reality. Unless you have that money to move the market, you don't always know what's going to happen, right? So that's that on gold. I'm bearish on this guy until I am invalidated, right? So that's that about gold. So basically, let's go back to VIX. So VIX, when VIX is buying, Nasdaq is going to be selling. That's just the direct correlation, right? That's a direct correlation. As of last week, right? I'm looking at this eye, and this eye. You can see this eye formed on Tuesday, and Wednesday we traced, and before Friday we took it out, right? And so that's like probably a purge on sell or on buy side liquidity, right? So we can see bearish price from here. So if you see very bearish price from here, we might be bullish on what on Nasdaq. But let's look at what Nasdaq is actually doing. Now you can see that that guy is buying. This guy here, this guy is buying, and Nasdaq is doing what? Nasdaq is selling, right? That's the relationship. So we just took out sell side on this guy on Nasdaq, and we have relative equal high, and the price action has been rough so far, right? It has been so rough so far, which means and which equates that there's a lot of stop losses that are being placed here. You know, every reluctancy that you see here, every trader we are going to naturally see it as a place to put their stop losses. Don't just look at markets in the sense that okay, there's so many stop losses here, there's too many stop losses there. Look at it in form of where order is, right? Okay, for example, at this eye, be a lot of breakout artists here waiting for price to break out, and then they will be buying, and this low as well, right? So markets will always go to where orders are, and that orders also involves stop losses as well. So market will always goes to where orders are in terms of resting limit orders, stop losses, and all of that. And all of that, when stop losses are being triggered, that's money. People will lose money, and money equates what? Money equates liquidity. So you need to actually understand the real mechanism of market itself, so that you're not just drawing line and all of that. Because if you're just drawing lines and money, like I don't know how to actually explain it and boil it down to us. You need to understand market intimately. That okay, this thing is moving, and this is what it means in reality. For example, liquidity. Liquidity is money, right? And for example, if people are waiting for breakout here, which means that there's a lot of people betting money that once this high breaks out, they are going to be buying, right? Which means that there's a lot of orders here. Orders equate liquidity, and the same thing equates to this place as well. sell side, in the sense that when price break out here, there's a lot of breakout artists waiting for price to break out so that they can continue selling, which means there's a lot of orders here as well. Now, markets will only goes to where there's more orders. If there's more orders here, market will go there. There's more orders here, market will go there. It is now your job as a trader to figure out, okay, where is the most dense order? Where is the most congested order? Where is the most congested order or liquidity? So liquidity means order, liquidity means where a lot of people are expecting price to go to and all of that, where a lot of people confidently put their money that this is what I believe price is going to do, right? So liquidity is not just some woo-woo concept or some, you need to intimately understand it, have a real relationship with it, so that when you are drawing it out, when you are annotating it, that okay, this is liquidity, you know why you are drawing it. You are not just mechanically drawing relative equal highs and relative equal lows out. At least if you've been in the space for like 2 3 years now, you will know that not every relative equal highs or relative equal lows are liquidity. There are some that market will just leave them. What does that mean? There's not enough liquidity there. There's not enough orders there, because there are another area whereby there's more orders, there's more liquidity. So market will gravitate there to facilitate that orders, to facilitate that trades, right? So that's what it means, right? So just try, going forward, try to understand markets very well, intimately, like understand. Don't just try to memorize, okay, every relative equal high is liquidity, every relative equal low is liquidity. That's not what it means. Really, that's not what it means. Sometimes that's what it means, but you need context, and context needs wisdom is going to give you context, right? So basically, that's that about that. So basically, what we are seeing here, we've taken out this relative equal high now, this highs, and we know what that means as well, right? So we might see a little bit of bearish price now, like a retracement lower and all of that. So basically, what this means is that there's a lot of fear right now. There's a lot of fear. We are above 30, which means there's a lot of fear in the marketplace. There's a lot of fear in the marketplace, right? So, you know, um, we should be expecting buys. We should be looking for a buy setup on Nasdaq, right? Whenever you see this guy above 30, start looking for buy setup, right? And as you can see right now, we just stop under this low, right? Price can actually shift deliberately and start halting for what? Buy side liquidity. Do you understand? So that's that about that. So I'm bullish on this guy. I'm bearish. I'm bullish on Nasdaq, and I'm bearish on what? On gold. So that's all I have for us. Thank you very much. Lucky, are you here? Lucky, are you here?
Yeah, I am. You're
All
done,
right.
right?
Yeah, 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 yeah.
Okay, so I mean, one thing I love about your teaching is you always take out your time to address your subject matter. That's very, very laudable, you understand? All right, so guys, hope you're enjoying the section so far. Now, if you're looking at your screen, you will see the latest incentive from Handtech traders. All you just have to do is free 10K enhanced X accounts. Now, enhanced X account is a very interesting account you would love to get for yourself because they have flexible rules that you can trade with and make good money with, right? So all you just have to do is like, follow, first of all, like and comment on Handtech Trader on Instagram. Then there's this new post they made about March Madness, right? So that post about March Madness, engage on it. Engage on that post also by liking and commenting on the March Madness post, and then 25 winners will be selected randomly to win a free 10K enhanced X account. Now imagine you trading with a $10, $10,000 account you know that as far as you're following the rules, at least 10% is something, which is $1,000. So do not miss out on this offer. Make sure you follow the tags, comment and like on Match Madness, like, comment and follow Handtech Traders on Instagram, and be active on their page. Turn on post notifications so every post they do, you get advantage or you get to see it ASAP. And there are many other offers, in fact, and sweet existing offers that you get to know with time on Handtech Traders and Handtech Markets. All right, I'm bringing on the next tutor. Ian Forex, please do it to indicate if you can hear me. Yeah, are you hearing Forex? Okay, you.
Hi guys,
Yes, yes, I wasn't before, but I can
can you hear
now.
me?
Yes, I can hear you now. All right, all right. Sorry about the little break in transmission. We're just trying to fix a technical issue. All right, so guys, if you've been active on the call so far, you would know that we've had some explanations on Euro USD, on Nasdaq, and on gold. All right, yeah, and I know some of you have questions that you'd love to ask. We can entertain some questions. Notable was done that. Okay. Yes, we can hear you. All right, so guys, if you have questions you would love to ask, I would love to make this Outlook session interactive. Maybe any parts you would want to be clarified on, or you can quickly do that. And Jumarex, can you hear me? Tutor Jumarex. Hello, Tutor Jumarex, can you hear me? You are not muted. Oh. Hello, M Forest, can you hear me?
I'm trying to unmute my mic. Let it work. Okay, it is blocked. I'm coming. Let me fix that.
Yeah, first, can you hear me now? All right, guys. So while we wait for the tutors to come on board, I would.
I
Yeah, first, can you hear me now?
okay, can you hear me? Yeah, yeah, I
Okay,
can hear
okay.
you
So
better.
your network is better now, right?
Yeah, yeah, it's better.
All
All
right,
right,
let's
let
move
me.
on. Let's move on. Yeah.
Can you hear me? Oh,
Yes, yes, yes. I can.
all right,
Just
so let me go ahead
you.
and share my screen.
All right, you're up now.
Hey guys, good morning. This is EM Forex. I'm a tutor under the Dr. B's Academy, and looking quickly into gold analysis for the week because we have a whole lot of geopolitical currently circulating. It's currently affecting gold prices, oil prices, and some other international commodities. And even silver also is still going to, we're still going to expect some bullish movement on silver in the coming months. So let's keep an eye out for uh, silver also. All right, so let me quickly share my screen so you guys can see what I have for gold because I'm expecting some movement on gold. Gold has been short term, but we are still expecting some bullishness on gold anytime soon. If you can hear me, just drop one in the comment section so that I know that you can hear me. If you can hear me, just one in the comment section so that I know you can hear me.
I can hear you though. Make I drop my own one.
All right, can you see my screen now?
Not yet.
What about now? Huh?
Let's see. Let's see. Let's see. Yes, you have the chart of gold, right?
Yeah.
Yeah, we can see your screen.
All right. All right, guys. So let's quickly look into what gold is currently because I've seen some gold and so far it has gotten to where I wanted to exit. So let's see into a change or we're expecting a change in price movement so that we can continue in the bullish direction if price is willing to continue in that direction. So currently this is the 1 hour time frame chart on gold. So I'm going to be going over to the daily time frame. At least it's going to give us a clearer picture of what we might most likely expect in the coming weeks. Okay, or we could also look into the weekly and then just track it all the way down to the time frame where we're looking to enter. Okay, so this is the weekly time frame. We can see that last week we had a sweep above the previous week high, but price failed to close above that high. So it's giving us sign of bearish presence. Okay, from the previous week. Okay, but one thing you need to take note of is if you look closely, price has not broken the low, though it has swept it, but we are still see a potential solid movement. Then we need to see a close below the low of the last bullish presence in the market. Okay, on the weekly time frame. Okay, so the weekly time frame, I prefer looking at the individual candlesticks because they form like those candlesticks on the weekly time frame. They don't just form because they want to form. Okay, they form with intentionality, and then they give you the overall direction of price. Okay, so on the weekly time frame, I prefer doing a candlestick analysis on the weekly time frame. Okay, so if we get a close below this last week, the last bullish presence on the weekly time frame, we can see a potential drop. Okay, we can most likely see a potential drop to any untapped level of resistance or support. Okay, in this case, it's going to be a support. Okay, so this is the weekly time frame. We will not really be marking out any levels because we are going to be seeing it clearly on the daily time frame. So on the daily time frame, we can start marking out our levels, and the levels we want to see on the daily time frame are levels where price is failing to break. Okay, there are two patterns I look out for either reversal or continuation. Most of the patterns is something you already understand. So it's just going to be a market structure shift. Of, okay, so this is the way I want to see price. If I'm expecting a move to the upside, okay. So if I'm expecting a move to the upside, the moment price break above this structure, so the moment price break above this structure and then retest it, okay, it's just a simple break and retest pattern. Okay, the moment price breaks above it and retest it, then we can most likely expect that this previous level or the other block level will most likely hold price for a continuation to give us the higher high and higher low scenario to identify an uptrend. Okay, that's the simple schematic I applied towards market structure. So that's the same thing I'm going to be looking out for here on the daily time frame. Okay, so if it's not present, okay, if it's not present, then we just have to look for either if this is the reversal, then we have to look for continuation and check if the continuation is present. Okay, so whenever we're reading market structure, we try to read it from both the bullish side and also from the bearish side if we're going to see possibilities, and then go with the one that is most strong. Okay, especially when you're trading with the trend, you just always want to go with the one that is in the direction. That means when they tell you trade in the direction of the trend. Okay, so most times it doesn't mean you will not see reversals. You just have to weigh the both options and see if the one that you're going to take is going to be in the direction of the trend, or if you have more confirmations to go against the trend. Okay, so um here on the day time frame, let's mark out our levels. Let's mark out our levels on the daily time frame. So this market has been bullish. Okay, for a bullish continuation, I want to see a double break of structure. Okay, a double break of structure. My system is lagging. I don't really know why, but it's lagging. I'm not the speed at which my mouse is moving because I believe you are also seeing that my stuff is lagging. I think the weather is very very hot. So you guys, please 1 sec. I'm coming.
All right.
Can you hear me?
Yes, I wasn't saying it
Can you
before,
hear
but
me?
I can see it now. You
Hello.
can move on. I can see your screen. I can see your screen. Move on.
Okay, okay. I'm coming. Just 1 sec. I'm trying to turn on the fan for the system so it doesn't lag. All right. Now for a continuation pattern, we would like to see a double break of structure, okay, and then inducements, then a point of interest. Okay, so if we've seen that pattern play out, okay, if we've seen that pattern play out, then there's more chance that we are actually continuing in the bullish direction. Okay, so let me draw the pattern I want to see play out, because all these are based on technical analysis. Okay, all these are based on technical analysis. So I want to see a double break of structure. Let me just, okay, I want to see a double break of structure, an inducement that is to the POI, okay, a high or a low that did not get to the POI as my inducement, and then price reaching into the POI and then move out. Okay, this is what I want to see for a continuation pattern. Okay, so I have to check this either for the bullish side or the bearish side. I have to check this if it's on chart. If it's not available on the chart, if are not available on chart, then we'll just have to wait till they form. Okay, so that is how I do my technical analysis. Okay, so now I just have to watch out. So what I'm expecting here is this level. This level, there's a double break of structure here. There's a double break of structure here. Okay, and then price reached into that POI here using this week, and it's pushing out of that level. So my target for um this particular entry here, okay, if this successfully happen, like this is the bullish area here. So as price got into the POI and tapped it, my take profit level is X supposed to be this high. Okay, so the moment price breaks above this, it is expected that this particular level has successfully delivered price. Okay, so let's go over to the 1 hour time frame. Okay, on the 1 hour time frame, we'll just observe price. Okay, we just have to observe what price is doing on the 1 hour time frame in respect to those daily time frame levels that we marked out. So this is a high point, okay, on gold. So any bullish move I'm getting, this is my take profit target, okay, which is what we did on the daily time frame. And then for the sell side, any bearish move I'm getting, this low is going to be my take profit target, because price will all want to revisit this level. Okay, so I've gotten my overall target on gold. Okay, I've gotten my overall target on gold. All I'm just is to see the 1 hour market structure, okay, to point me in either of this direction. Okay, but remember, we are bullish on the weekly time frame. So most of the time you just always want to be looking for movement going to the overall direction. Okay, but if you see that selling pressure is like the counter direction is strong also, then you also have to trade in the direction, like in the counter direction, till price will shift to the overall direction. So on the 1 hour time frame is where we'll be stopping, okay, because we can clearly see what is actually going on. Okay, so Here there was a structural shift here. Okay, there was a structural shift here. Price shifted structure here, retested this level, and then dropped. Okay, which led to a double break of structure here. Okay, which led to a double break of structure here because price broke out of this structure, and then this structure here. Okay, we are if we're getting any strong bearish impulse should come from, let me see. Okay, this is 50%. So anything above 50% is a good level. Okay, so any major sales, I should be expecting any major sales to come in from here. Okay, that will take me to that low. That low I marked out on the day time frame. So this is my first point of interest for sales. Okay, and then there's also a big block right here. Okay, just together with this over here. So the zone around this region here where price we want to react from. So any sell continuation pattern that is coming in, price has to push back up to trigger this level here and then drop. Okay, and then drop. I would prefer to take sales from this point here than from within this range. Okay, because this is a range right here. Okay, this is a proper range from last week. Okay, let's see. So this is a proper range from last week. So I would like price to sweep above this range and then continue drop it. Okay, and let's see. Let's see, because price is reacting from this other block right here. The price is reacting from this other block right here to take out this low. So this would be unlike the overall take profit for this move here. This will be like the overall take profit for this move. Okay, but if price break below this low, we can still reposition and get a fresher level around this region. So this is my bias for gold. I'm going to be short and bearish back into this area here. Okay, but I'm not going to ignore these lows because they're going to be take profit levels. You see these lows, the moment that this triggers, you can just take out your profits around these levels. Okay, so these are take profit level. You can take a screenshot and just work with it. So these are your take profit levels, and so these are your take profit levels for gold. So this is where I'm looking to expect gold sales that will take me back to these lows. Alright guys, so that is it from my end. Lucky, are you there? Lucky, can
Yeah,
you hear
yeah.
me?
What's up? Yeah, I can. I can't. Or
I'm good,
just
I'm good.
let me away. All
Let's see
right.
if
So
anyone
you,
has any question.
okay, let's go through the chat section. So when your screen is shared, you guys can see the chat section, right? All right. So there's a
No,
lot of
I
thank you, thank you, thank you. Yeah. But if you have questions to ask, on what Tutor EM Forex has for us on gold. Is literally looking from gold from the higher time frame perspective. I think he's stopping at the 1 hour to take his trade. So if you have what do you call it, questions to ask, clarifications, or you want to add, please use the comment section. And if you understand all he said, thank you so much would thank you so much Tutor EM Forex would suffice to show that you understood what he taught so far. All right, so let's see if we can entertain a few questions or concerns or inquiries or what he thought. Thank you, EM Forex, but that's fine. But say right EM. There's no EM, it's EM.
And they see soft, is
Uh,
it soft hate for?
yeah, yeah.
Alright, so any other question, and then, but for a bullish direction, for us to have a bullish continuation, see what I would like to see. It's just showing, it's just right in front of us here. So I would like to see this level here get violated. Okay, I would like to see this level here. Okay, let's go to the 1 hour time frame because that's where we did our analysis. So let's see the 1 hour time frame will be this level here. Okay, but this level, why I'm actually not regarding it to be like a structure because it's an inducement for us to have this level triggered. Okay, so um it's going to do two things. It's either it serves as a break because the moment price breaks above it and violates this inducement, we then have a shift in structure back to being bullish. Okay, we then have a proper shift in structure back to bullish. If you notice, price hasn't broken and closed below these lows here. Okay, so we then have to give a retracement to try and push and break it back again. So that's it. So I want to see a break above this level here. That way we'll have a break of structure and then a double break of structure, so we can get a continuation from inside this range here because price will have to come back into this range and then continue pushing up. So that is it on gold for both the bullish and bearish um, top down analysis.
All right, so if you understood that, that's fine. So this is what he's expecting. His price is actually quite far. Since he's using the 1 hour perspective, is more or less like a couple of pips, about a
Yeah,
hundred and something pips, hundred and 1,000 and something pips. I be how they pay me.
yeah, that's because is I'm expecting it to unfold not in a day but like in a week. So if price get to this place, it's going to be like a swing down there, and then we can have multiple entries along the line. So, but if you want to day trade it, you can just go down to the 5 minute. But there's no really much price action currently because gold is in a range. So gold is ranging. So until it breaks out of the range, and then we get the direction.
All right, so guys, that is the long-term outlook on gold. So technically, if you're looking to take this setup, you either sit on your hands and wait for it to get there, or you look for buy opportunities to there. I mean, these are two ways to play the game. Either you play the long-term swing game, or you play the buy to sell game. Right, Ian Forex.
Yeah, sure. They can scalp along the line too.
Yeah, so that's it. So that's a very beautiful one from Tutor Ian Forex. I really appreciate your time and how you broke things down and all that. All right, so I'll bring in on the last tutor for today. All right, I'm seeing good comment. Thank you so much to EM. Thank you so much to EM for it. God bless you and all that. Yeah. So I'm glad you guys gain knowledge and trust me, he's going to bring in more of this come tomorrow. All right. So Jumarex, please indicate if you can hear me. Tutor Jumarex, you can just unmute yourself and say you can hear.
Yeah, I can hear you. Can you hear me?
All right, beautiful one at that. All right, Ian Forex, you could unmute or share your screen. All right, Jumarex, so you have the floor. You can share your screen.
I'm coming, guys.
All right.
Please confirm if you can see my screen. Can, am I audible enough? Hello? Confirm if you can see my screen.
So I can see
Hello?
your screen. You have US 30 on your screen.
Okay, okay. Thank you. All right.
Yeah.
Good afternoon, everybody. This is good afternoon, good morning, good evening from wherever you're connecting from. This is Joseph Mark Controller, popularly known as Jomarix, and I'll be showing you my perspective on two financial instruments, and one of which they've overemphasized on, that is gold. And I would also love to um, analyze US 30. I'm currently on US 30 by do, and I'm anticipating more push to the upside. All right. So first, I'm going to start off with the XY. Let's see what the XY is saying. All right, and I believe each and every one of us, we are aware of the current happenings. Okay, you can see the crazy gap up, right? The crazy gap up. This was yesterday, Friday, and markets opened around, yeah, bearish on a lower time frame. On a higher time frame perspective, let's see what we got. This is DXY network, not ones. XY. Okay, on the daily time frame. All right, on the daily time frame, you can see the pullback right from this region. We had a sweep. Market had already swept. I mean, this liquidity right here, that was around March 26, and currently market has been able to sweep the liquidity again. All right, so now we have all right. So currently we have a rejection at this point. What does that tell you? It tells you that there's a high tendency that the market is going to drop off from this point. Okay, and what are we going to be looking out for? We are actually going to be looking out for a sweep of this CRL, that's candle range low, that we have here. Okay, so and market has been able to sweep this high. Okay, you can see the high here. This is the I, the previous day I. That was Friday. Can you see? So we, I want to see market close below. And mind you, when you're trading USD related pairs, like for instance, gold. Okay, gold. If DXY is weak, what do you do on your gold? You buy your gold, which means you're simultaneously selling off what your USD currency. Okay, and that was last week, Thursday, Friday. We had a crazy push to the downside, bearish move, and that was due to the fact that we had, an impulse increasing to the upside on DXY. So at this moment, we could actually have something like this on gold. I share almost same perspective with EM Forex. It showed you guys is POI. Let me get okay. Let me use this chart. I think this is a one do. Let me use this. All right, so this is basically it. Well, 5,000. Okay, so on gold, this is what I'm looking at. Now you could see, guys, that gold is still forming series of higher lows and higher lower low, right? We had a break of structure right here. I will take this as a major level. This level here, I'm gonna take it as a major level. Yeah, that you have here. Can you see? And it's a key level. Okay, where we have resistance. I mean support turned resistant. Okay, support turned resistant here, and not just only support turning resistant. You could see the crazy push to the downside. We had a break of structure. Okay, shift in character. All right, so we have double break of structure, one, two, then the last one, which changed this whole structure to a bearish move. So of course, as you all can see, it is very, very clear. um all right, so I believe you all can hear me. So we have currently a ranging market structure right here, and we want to see markets do something, and that is a breakout, because at this point nobody has 100% um bias. All right, so we're actually gonna see either a break out from this level right here. Could see something like this. Okay, then continuation pattern to the downside, and possibly market will come over to this level. That is if the market will sell, because my bias is not confirmed yet, because market is still ranging, and many traders will be looking forward to what's it called? They'll be looking forward to New York's session. Okay, so around that 2:30 would have more liquidity in the market. So our market will come for this high, this all-time high. Okay, is that good all-time high? I guess so. Around this point, this level right here. So now you need to be a patient trader. You either wait for a breakout from this levels, either here or here. So, and let me move over to 1 hour. Let's see what we have. So it's very clear that the market is ranging at the moment, and there's a high tendency that market will come clear this low before it gives a crazy push to the upside. Taking drugs. All right, so basically, we want to see markets take out this high or this low. But I'm actually bullish on gold at the moment and waiting for price to come over to this level. You see, here's actually potential area of interest where market could possibly tap before a push to. But one thing you need to understand is at every point in time you need to observe basically on key level areas. You need to observe market reaction at those levels. Okay, you don't just sell from here because market has tapped this area, or you don't just buy from this level because market has swept liquidity. Okay, you don't do that, and you would agree with me, guys, that uh, this range here, if I go over to higher time frame perspective, let me do something real quick. All right, so on higher time frame perspective, this range, uh, okay, this range, there's a range here. All right, you can see market has tapped the discount level for this range, and that is why I feel market is actually going to buy. Okay, market has grabbed orders around this level. And this is taking my Fibonacci. Let me take my Fibonacci. Let's see what we got. I think I'm just gonna analyze gold only. Now, can you see? Market has stopped the discount and we have a retracement around what? The 50% Fibonacci level. So there is possibility that market is going to kick off this, take out rather, take out this level and buy to this key level area, then possibly sell or keep trading upward. Okay. So, but then I'll be waiting, like I said, I'll prefer to wait for New York session before I enter my buy or sell. And like I said, you ought to also ensure you check your DXY to see the close of candlestick. That would also guide you on your decision. And it is very, very simple. And how many hours do we have left? I'm going to work with 4H. Once you want to make sniper entry, you can see the time is 12:27 Nigerian time. And this current candlestick 4H, it remains 1 hour 31 minutes to form its to complete its formation. And you can see here rings a bell. This is a range. Market swept that liquidity above, right? That's our CRH. That's and where do we have the low? You have the low right here, and that is to tell you that there's possibility that gold would buy. Okay, because gold would want to come to this level. Why? Remember, if we have no liquidity in the market is not going to move. So market is going to try as much as possible to grab liquidity at this level. Okay, let me highlight it at this level. Grab liquidity here to possibly break out this level or give us a break, right? A break, uh, a break and a retest formation and continue upward. Okay, but then, like I would always say, observe market reaction. So DXY is bearish. You can see this is 4 hours time frame. On the daily time frame, it is also bearish. We have a rejection. That rings a bell, right? So now, that being said, let me check my good again, so that for those who want to perhaps take a screenshot, whatever it is you want to do, you can do it before I end my session. Okay, like I told you guys, this is for each, and it is advisable you wait for a breakout. And lastly, US 30, a quick one. US 30, what do we have? All right, like I told you guys, I'm actually on a buy. I'm buying US 30. It seems as though the guy wants to keep on selling, but then this is what I've been able to map out. Can you see? So basically, on 4 hours time frame, um, on 4 hours time frame, market reacted from this other block, right? And you said we have a fair value gap. Let me just highlight something for you guys to see. Just very small. I was expecting this entry. Good, good, good. It gave us a turtle soup. There's what we call turtle soup. Okay, just like a sweep of liquidity. Immediately market swept that, just tap that level, others sitting in blocks. I had to enter my sniper entry. Okay, and this is the significant level that I'm waiting for price to get to. Okay, but then when London, New York session opens, we'll see more liquidity in the market. And if you notice something, US 30 and gold, they are actually given the same price action at the moment. US 30 is buying, gold is also somewhat bullish. They are both somewhat bullish. So US 30 can also serve as a more, a confirmation for me. Okay, and as you can see here, we have a gap. And what do you think might possibly happen? There's possibility markets will fill up this gap. It has only filled like 50%. So I believe US 30 is going to come over to this place, and which would aggressively, not US 30 aggressively pushing, gold, but bear in mind DXY is weak. So if you are buying gold, you're at greater advantage. Okay, before New York session opens. Okay, so we could have liquidity drive up to the level we've marked. Okay, let me go back to gold. The level we've marked Wandu. Okay, this level right here. So I'm waiting for gold to buy to this level and possibly have a push to the downside from there. So that's going to be all from me. Thank you all for listening. Yeah, over to you, Boss Lucky.
Max, how you doing?
Yes, I am.
Okay, okay, all right. Because I noticed you stopped saying anything. All right, so that's a wonderful one on gold. So we can conclude that the general bias for now is sales on gold until proven otherwise. So for now, we're looking for sales on gold before we continue the buy to the upside. This gold and Jumarex is very funny because at the end of the day, we all were expecting buys, buys, buys. Expecting buys, 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 but gold just did its thing. All right, guys. So that was a wonderful section from us and the Dr. Bizelight team today. And I hope to see each and every one of you tomorrow on the Tuesday Telegram live section where we'll be looking to get live trade ideas and other important things for us to make money with. All right, guys. So take care. My name is Sutaloki, the coordinator of the live section, and I hope to see you guys soon. Take care.